Your credit score is almost entirely behavior driven. Being educated and applying that education, which means kind of hard work and be diligent, and your credit score is going to go up.
All right. So I have been in the mortgage space since 2005, and I've seen more credit repair companies destroy homeowner and home buyer dreams than I've actually seen them fix it. And for 12 years, I was started in '05, and for 12 years, I was in this sort of predicament where clients would call me and say, I can't get a hold of the credit repair company. The credit repair company would tell me the client's not providing the stuff that we need, or they're not picking up the phone. And I genuinely had no idea. Like, I didn't want to say either of them was lying. It could have just been miscommunication. And then I met Sam Parker, my good friend, and really that changed everything for me, for my clients, and in regards to, and obviously we'll talk about that, but there was so many mortgage applications getting denied in that time frame. So today we're going to start exposing some of the truths and the lies around credit repair. And Sam Parker, you are the co-founder of My Credit Guy, Credit Repair and Restoration. And you don't just fix credit scores. I think one of the big things you said to me really early on, you may not even remember years ago, is that you also are getting the clients mortgage ready, not just getting that score improved. And between myself, my team, I don't know if it's the numbers in the hundreds or in the thousands of how many people that we have to refer out for credit repair. But you and your team, whether it's first-time home buyers, current homeowners, you guys really solved like the biggest problem in credit repair, and that's honesty, communication, and transparency. You guys have this amazing credit repair portal that allows the home buyer, the lender, you guys to all be able to log in, the real estate agent, and see what's actually happening, with credit repair in real time. So, Sam, thank you so much for being on, brother. I know you moved some mountains to get out here today, and I'm really excited to dive into some of these topics. But if we started more of some curiosity-based questions for me, what do you feel like right now is the number one credit repair lie that's keeping home buyers from getting a mortgage approval? And why do 90% of credit repair companies still tell that lie?
Yeah, well, I think that the most common misconception is that people are focusing only on their negative items, and they think that if they work with the right company or the right person, that they're going to be able to sprinkle that special sauce on their credit report and just get items removed that are valid. And what happens is that over a series of months, either they might get a temporary deletion and then it comes back on the credit report, or they never get that deletion. The client gets disheartened, and the whole process associates that experience with credit repair in their mind, says credit repair, credit improvement doesn't work, and abandons it altogether, right? So I think the most common thing out there is that people are focusing only on collection items and thinking that they're going to get deletions, when in reality, we know that it's an overall game plan, a complete credit profile, and that you can get points from 5 different sections of the credit scoring algorithm, and that we need to focus on all of those at the exact same time.
I love it. I love it. And to kind of speak to that mortgage readiness thing, like I've seen a home buyer with a 750 credit score not be able or get denied for a mortgage. Like, what does that mean to everyone that's buying a home?
Well, it just means that you got to have your stuff together, and that you need to be ready going into the process and know what are the things that qualify me and disqualify me, both in terms of credit, debt to income, and things that would set off a red flag where someone would say, I don't care what credit score you have an outstanding whatever it may be, right? That's going to prevent them. So you want to go in prepared with your head held high, and you do that by knowing what's on your credit report and being familiar with it and being okay with it, meaning everything on your credit report has either been resolved or you recognize it and can claim it.
Love that. What would you say right now is like, because there's always something, right? But what would you say is the credit repair scam right now that most first time home buyers are falling victim to, and what's an easy way to spot that?
Yeah. So anytime that companies are making wild claims, and wild claims are, you know that this item is your responsibility, and I'm telling you I can get it removed, no problem, right? That is a red flag, the biggest red flag there is, because if you know the law says, number one, that a company can't report to your credit report inaccurate data, or else they will be fined and get in trouble and all that good stuff. So you don't, if something's on the credit report incorrectly, it's either usually not malicious, it's just a mistake, or it's correct in a lot of cases, right? And so these companies will go around and they'll prey on these folks and they'll say, hey, listen, you owe thousands and thousands of dollars to this guy, that company, and they're all coming after you for only $1,000. I'll make it all go away. And that sounds really good to somebody. And when I'm talking to them and I'm saying, hey, listen, we're going to call these companies up. We're going to get this reconciled. We're going to negotiate. We're going to do this. And they're saying, so wait, you're saying I'm going to pay these people? I'm saying, well, I mean, you owe them money. You're probably going to pay them some of it, but I'll negotiate it for you. To just pay $1,000 and be done with it sounds really great. But then we hear from those clients typically maybe 3 months later after they realize what just happened, or worst case scenario, and this probably happens more often, is that the lender loses that client altogether because, again, that client gets disheartened with the whole process, says, you didn't send me to the right person. You sent me to a company that said that they were going to do this. And so I'm punting that bad credit repair company and this bad lender altogether, and I'll just start over, you know?
No, it's unfortunate and it's sad.
Yeah.
And we're gonna deep dive obviously into all of this. And for people that don't know your story, Sam, because I think one of the things that beyond how much I respect you as a person, right? I think one of the things that really like makes you guys stand out to me, is obviously you understand the law, right, behind credit repair. Obviously, we've already talked about, the communication, and you really have shown me your back end systems, right? Like when I was having to come into Jesus moment trying to build out my CRM years ago, I think, you helped me kind of get in there, and I saw like how robust that looked like and how much time you put into that. But for the people that don't know your story, how did you end up becoming the guy that mortgage professionals and real estate agents trust with their home buying clients?
Yeah, it's a little bit of a windy path, but I'll try to press fast forward on it and give you the short version. So I fell into this when I was 19, almost 20 years old. I was in between semesters in college, and I was just burning up the phones for MCI at the time. A lot of people in Cedar Rapids did that as a part-time job. Ended up that I had the gift for gab, and people bought what I was selling, and these guys recruited me to be the head of sales and marketing at an upstart financial services company. And I was so young and eager that I was like, I mean, that's exactly what I'm going to college for. I'm going to drop out and I'm going to come accept this position, right? I get there the first day, and all it is a startup credit repair company, which I hadn't even ever heard of credit repair, and I didn't really know what credit was too much at the time, but a startup credit repair company. And they had a phone, no computer, just a phone with like buttons on it, like old school, right? And then a stack of papers. And they said, these people have less than 600 credit scores, and we know that. And then it was a phone number. And that was all. I was supposed to call these people, say, hey, I know you don't have good credit, and we fix credit. And I got a lot of, no thank yous, if you could say it like that. And during that process, I was like, this isn't the best way to do this. I'm not dealing with a motivated person. I want to help people, but these people I'm calling don't want to help themselves yet. And I'd rather, help the people that have their hand raised. So I had the idea that I would switch gears and start calling mortgage people and saying, hey, when you have people, what are you doing with them? And at that time, there were some big credit repair companies already out there, already making a bad name for the industry. But I was able to say, hey, I'm local here. I'll really look at the credit report. I'll give you a game plan, yada, yada, right? So I broke away from that company after about 10 months because I found out that they were actually just running a mortgage company out of the back of it. And I was supposed to be generating leads for them. So they didn't love it when I switched gears and started talking to mortgage companies. So at that point, I went out when I was 21 years old and started my first company, American Credit Repair. Grew that up for about 3.5 years. Learned all the reasons why being a business owner is not as cool as you think it is. And then sold 3.5 years later to a competitor, worked for them and helped them build out a system for 6.5 years, left them in 2015 and moved out to Arizona. That's where I launched My Credit Guy. And then we met a couple years later and, here we are 10 years later and we've built a pretty good system with, pretty good brand so far.
I absolutely love it, man. Now, I've been referring clients to you, to your point, home buying clients since 2017. And I had that constant problem, right, of where credit repair companies would tell me they're waiting on the client. And obviously I was getting caught in all that. And you completely solved that communication nightmare. And I like, even right now, I mean, even for me, I am a client of yours. I was in the past, and then recently had some random things happen on my credit, and obviously you guys are my go-to. So it's not that I just I don't only have testimonials of clients that you've been able to help. I'm obviously one of those clients myself. So I know what that like. Even for me, like going through it as a client, I'm like, man, I got to improve my communication process on the mortgage side, right? Because I'm like, these guys are good, man, and hats off to you on that, man. You guys have done such an incredible job, and only continue to do more. Can you elaborate a little bit on what is credit repair for home buyers, and how is that different just from like regular credit repair?
Yeah, so it's usually just a difference in the strategy. Like a regular credit repair client, I can go with a mix of like a debt pay down strategy along with a credit improvement strategy. And the difference being like a lot of people want to pay off high interest rates first, or they want to do, something that Dave Ramsey told them to do, right? That makes sense for eliminating interest. But when you're trying to improve for credit or for mortgage financing, we got to get those scores up as much as possible. So sometimes you do things in a different order than you think you would, or sometimes, instead of like, for instance, instead of going and tackling your biggest collection, if you had 4 or 5 collections, I would want you to tackle 2 or 3 of the smaller ones rather than the biggest one if you have confinements on money that you can use, right? And so a lot of people really like that psychological feel of knocking the big stuff out first and then working their way down, or knocking little stuff out and working their way up. They do it one way or the other. And sometimes when you're preparing for a home loan, what we're doing is we are finding out what credit score is needed, and then we're talking to your underwriters or your loan officer and saying, hey, Mike, what is it that you need done? And Mike, your loan officer, might say, well, I can have this amount in charge-offs, but I can't have any collections. And so then we know to get this clear to close with UWM or EPM or whatever, that we're going to need to have these different criteria met in order to get this file qualified. So it's just a little bit different in terms of strategy, in terms of speed, and in terms of, the different things that we're going to be focusing on.
I love that. And you're right. It's you guys have like made it so easy on us. And so walk me through like the actual credit repair process you take a home buying client through from start to mortgage approval. What does that look like?
Yeah. So first of all, when the loan officer sends the file over, we're going to start with a free review on all files. And if we can get a file back to the loan officer without that client needing to participate in our paid for credit repair, then we do that. We come back and we say, hey, listen, client needs to pay this down, open this up, transfer this, sign on as an authorized user to the wife's credit card, whatever it may be, and try to get that deal done, right? Now, if they have collections, charge-offs, profit and loss, late pays, public records that need to be worked through, things like that that they disagree with, then they would be able to hire us. And at that point, we are going to assign them to a dedicated credit coach. We start with a detailed interview, line by line, figure out what they disagree with and why, because we got to compare that to reality. Because a client sometimes is going to come back and they're going to say, and that's not mine, that's hers in the divorce, or something like that. And I have to start by saying, hey, I need to prepare you that a divorce decree does not supersede a pre-existing contract. This is still yours legally, and we are going to have to work through this. And sometimes the client goes, well, I am never paying that. And I might say, I mean, that's your only item that we have to work through. It's not going to be a good fit for our services if you're not willing to pay that, because what else am I going to do, right? And so we'll have that talk right up front, make sure that they're a great client and a great fit, that we actually have items that we're going to be working on together, but we're going to assign them to that dedicated credit coach. We're going to figure out which items that they disagree with which items are valid, which things are, maybe, I don't know, that need to be validated legally. And then we're going to get any items that shouldn't be on there removed or updated to the correct status. And then at that point, we come to our clients and we say, hey, listen, there's no point of just going after this over and over again like most credit repair companies do. Either you strongly disagree with it, and if you strongly disagree with it, I now have the evidence that I can hand over to an FCRA attorney, but we can hand over to an FCRA or FDCPA attorney, Fair Debt Collection Practices Act, and we can say this company or the credit bureaus verified this and they violated this client's consumer rights, sue them, and they're going to have what they need. Or what happens more often than not is we go, hey, this item's yours, right? And the client goes, yeah, it's mine. And then at that point, we're picking up the phone, we're calling that creditor, we're helping the client negotiate a settlement or pay for deletion if possible, and getting true resolution on that item and being able to move past it once and for all. So we're getting things deleted that way. We're getting items resolved by investigations. We're helping the clients add new positive trade lines and teach them how to use those correctly. Those are real credit cards that they're able to use, not the ghost trade lines that people sell through other credit repair companies that are very fraudulent. We're helping them establish their own real trade lines and then curing their behaviors. And then we're helping them establish a budget and teaching them how to work within that budget going forward. So really, we're coming at the credit scoring algorithm from every different angle right out of the gate. And it's a dead sprint to get them mortgage ready and get them back over and then out of our system.
I love that. And this is a question I've never asked you, but because I know, like, I obviously before, like I told you, all the challenges I had with credit repair companies. One, I know that they definitely didn't understand the mortgage business, but like sometimes more about mortgages than loan officers. Like, where did that? And then obviously, you tie it to credit repair, but like, did you originate loans at some point, or was that?
No, it never. It's just been tens of thousands of scenarios that I've run through since, I mean, I was 19. I'm about to turn 42. So, we got about 23 years of that. And I don't say that to sound like some other professions who say, I've been doing this for 23 years. I'm just saying, if I'm looking at 20 credit reports a day or so times 23 years, like I've just seen it all. And I've run into those scenarios and helped lenders work through it. And then come the next week and run into a similar one where I was like, hey, this worked last week. Why don't you call your AE and double check? And they're like, hey, that actually did work. Like for a while there, we were getting it where if somebody would pull a borrower's credit report and then recheck it within 30 days, those scores were coming back the exact same. And everybody was like, oh, no, nothing that anybody ever does improves credit scores. And we had to teach a large part of the industry about releasing the social, truly ordering a new credit report and making sure that the data had been updated. So just like little things like that, where it's like, that actually wasn't my job or really have that much to do with credit improvement either. But while I'm at it, like, let's help more clients, So, yeah.
I love that, man. What would you say right now is the biggest myth about credit scores for mortgage approvals that you wish home buyers would stop believing?
Well, It's when they think that they know what it is to qualify. And so a lot of them will disqualify themselves if they think they have less than like a 700 credit score or 680 credit score. And it's weird because you get both ends of the spectrum. You get people that are delusional about a 500 credit score and what they should qualify for. And then you get people that are beating themselves up for only having a 660 because they used to have a 720 and that they're just trying to wait until that score gets better and they know it's bad right now. And I'm like, in my world, your 660, 680 credit score is pretty good, bud. Go ahead and apply for that mortgage, and then we'll optimize it along the way. But it's just being delusional one way or the other, and it all comes from not looking at your credit report on a monthly basis and understanding where you're sitting. So many people go months or years even, or mortgage qualifications between looking at their credit report, and then they're surprised at what they see, where if they just get into a good habit of checking that on a monthly basis, you're going to be very in touch with what you're working with and what the standards and guidelines and what you're going to need for credit score qualification. So
Love it. Now, there's all this craziness out there about, I see, like I get a lot of clients tell me, and then, they come back 6 months later when it didn't work, about this like DIY credit repair. Like what do home buyers need to know about DIY credit repair and why they actually need a professional?
yeah, well, because DIY credit repair isn't a new invention. It's been you could repair your own credit like forever, right? I'm actually my credit guy is coming out with a DIY app. Like we have it coming up because I know it's not what you actually want or need, right? Like for the people that could work through a DIY process, the information's all right there. Like you can print form letters off right now. Like you've been able to do that for years and years and years, right? What people need and want is a service, right? They want expertise. Just like when I hire someone to do anything at all at my house or a paid service, it's like just do it better and faster than me because I'm busy and this stresses me out. How about that? Right. And so when people are coming out and saying, oh, we have AI credit repair, we have this, it goes, I always just go, do you have my team of 60 plus credit coaches that are going to talk someone through this, answer every question they have, listen to them crying, like handhold them through it? And an AI doesn't do that. It doesn't. I've trained AI chatbots, like I have them. I just don't deploy them because my people are better. And when I have deployed them and done split testing, everyone hates that experience versus being able to talk to one of our credit coaches. So it's like their marketing is new, their titles for it are new, but it's, in my opinion, it's just nothing new. And it's not something that moves the bar because a client still at the end of the day goes, so did I do that right? So what would you do next? So what would you, and AI can only really, tell you so much or think so outside the box or understand, not as many scenarios.
Yeah, because in all reality, like I don't care what AI you're using, Chat GPT, Gemini, Manus, this and that, like I can get it to agree with me if I really want to, right?
Yeah.
So it's not going to necessarily give me the right answer, or sometimes I'll have to give it more information. It's like, oh, you're absolutely right. Like, and I'm like, yeah, but you just said like something completely different here, right?
Yeah.
So I fully agree with you on that. And so with you being in the credit repair industry for, well, now I wasn't gonna say it, but you did 23 years. So one, hats off to you on that. But what's the painful truth about how credit gets damaged that most credit repairs won't tell home buyers, and probably because it would hurt their business model?
Yeah. I mean, a lot of it's just there. Like, yeah, I mean, if I were to talk to like my best buddy and just remove all fluff, I would just be like, well, this was your fault. Right? Like, I mean, I'm sorry, but at the end of the day, aside from like medical collections, hardships, your kid got sick, God bless you, said in prayers, that was out of your control, right? A car crash, something like that. But so much of it is like, well, I didn't know, didn't know. It's like, you wanted the thing that you didn't have the cash for, you signed, you didn't read every little line that you did sign, you didn't pay when you said that you would. And Now we're here. So let's just work through it. Like that is what it is, right? Like, and that's again what I would say to my best buddy is like, I'm gonna get you back to an 800 plus credit score, but we're gonna have to cut the bullshit. Like, if you're gonna walk around all day saying it's not your fault, if you're gonna, if you're gonna weigh 500 pounds, but go, I just have no clue how this is happening. It's like, come on now, we're at least going to have to food journal and come to reality about what we're doing here, because if you're not willing to change your behavior, we're never going to get a different result, right? And so that is what it is your credit score is almost entirely behavior driven. And so that's what I got to get through to people. And that's why we educate. That's why when we hear other credit repair companies say we got the special sauce, or we're a nonprofit because of this, or we're AI and we can get things deleted because of that, it's like, all you're doing is confusing clients on what it takes to get a good credit score, which is being educated and applying that education, which means kind of hard work. Just work at it a little bit and be diligent, and your credit score is going to go up.
Love it. Love it. What would you say is the number one thing that tanks credit scores that home buyers do, thinking that they're helping themselves?
Yeah, so you got a couple big ones that are we try to get ahead of during the mortgage process. On the positive side of things, I'm a home buyer, I'm applying, I'm qualified, I'm feeling great about myself. Let's keep this ball rolling. I go and I pay off a car loan. I go and I pay off a student loan. I go and I close out a credit card and pay it off. All of those things are going to drop my credit scores, but I think I'm doing something positive, and I really am, right? But you're closing out an account, which removes basically the pay history or the age of that account from your overall algorithm. When you close out a credit card, you're losing what I just said, plus the available credit limit that factors into 30% of your credit score under credit usage. So you're just doing some negative things there during the mortgage process. And obviously that's going to hurt you. The other thing that people do where they just get a little bit ahead of themselves is they go out and they go, what's going to look great in my house? This couch, this set of appliances, this whatever, but they don't have the cash to do it, or they don't want to spend the cash to do it, or their loan officer said, don't you dare touch the cash in your account because we're going to have to verify that. And so they open up a new line of credit, and that new line of credit, not only is it a new line of credit that has to be accounted into your debt to income ratio and will mess up like the mortgage calculations, but credit wise, anytime that you open a new account like that, it's maxed typically, because like let's say you go to Best Buy and you buy $3,000 worth of appliances, well, they give you usually a $3,000 credit line, so you're maxed right away, which is going to drop your scores by dozens of points, and you added a new account and you added a new debt load, and so all those things work against you. And so not only would a lot of those things kind of hurt your credit, but they're going to have to factor into new calculations for your loan officer at the last second too.
That's a great answer, and you're right. Like because that client they genuinely are trying to be responsible, right? They're going in, they're making the payment, but it's that they're missing the education piece that would come from you guys. Like even I get clients a lot of times. They're like, all right, I'm gonna go pay off all these collections, and I'm like, hang tight.
Yeah, that's another one. If they go, I'm going to pay off we get that a lot. Pay off collections, close out credit cards, right? Are the things that they think they're doing that are really good. Well, anytime you pay off a collection, you're updating the date of last activity. Some of this is going to sound, this is a whole different podcast to break down what these little letters all stand for. But anytime that you do that, you're updating the DLA or date of last activity, which drastically decreases your credit score because the scoring algorithm kind of sees it as a new account with a negative rating attached to it. So there's just a lot of things where once somebody gets going with us, we just tell them like, look, we will end up educating you about all this so that you can drive the car yourself. But for right now, we're punching in the coordinates, we're setting the steering wheel, and you don't touch the thing until you get past there, right? Like unless us or the lender tells you to do something with your credit, do not do it, even if you think it's a good thing.
I love it. Now, for these people that are out there, these companies that make these crazy claims and we can get all this deleted in 24 hours, like what's the reality of what it typically takes to go from, and I know that it'll vary from client to client, but how long does it typically take to go from, let's say, bad credit to mortgage ready?
Yeah, a great question. I will say this. So much depends on what is on the report, and then compare that in relation to how much the client has in terms of funds to take care of that, right? Because what we're going to do is we're going to start off with a round of kind of fact finding. Is what's on the report right or not? We're going to make them prove it, or we're going to ask them to prove it in one way or the other legally. And when I say them, I mean the bureaus and the creditors. Now, once they do that, so now we're about 30 days in. Now, once they do that, I'm going to be able to come back to that client and say, okay, I can either, if you really disagree, I can investigate a different way again. We can refer you to that attorney, or we can start making calls right now. Now, if that client goes, look, no messing around, those were mine, start making calls. I can have the rest of those items settled out as long as the client has funds set aside in the next whatever day, 2 days, 3 days, right? And so much of it is dependent on the client's situation, because in the reality is typically that the client's not going to have all funds lumped ready to go, because they're trying to live. They're trying to save up for down payment. They're trying to pay down credit cards. If they're working with us, they do have a fee. I mean, we only charge a few $100s and not until the 30th day, but it is still a fee, right? And so they have some things that they got to set aside. So a lot of times it's going to be a little bit more strategic, like 3 to 4 month process that respects their overall budget a little bit more and kind of builds up and lets them chunk things on a monthly basis for 2 to 3 months after that initial set of investigations.
Well said. And you kind of alluded to this a little bit earlier. I just want to dive a little bit deeper into it. What's the risk of using like one of those DIY AI dispute bots that promise to fix your credit automatically?
Yeah, so a couple things. If it's at all associated with the bureaus and it being an electronic dispute, then what they do is in a lot of cases they'll slide in fine print that if you use one of their mechanisms to dispute and they come back as verified, that you don't have additional legal recourse after that, that you're foregoing the ability to call that lawyer and say, I tried to dispute this, it's wrong, it came back as verified, I got to go after them. There's some of those mechanisms that if you're using it and they're put out there by the bureaus or one of their partners, that you're forfeiting some of your rights. Now, the other thing that you can do is you can throw up a mechanism that's called a frivolous dispute. So if you dispute and dispute and dispute and dispute, or if you're paying a company to dispute the exact same way over and over again, the credit bureaus really only have to prove it one time before you have to come with additional information. But if they can legally come back and, per the FCRA, Fair Credit Reporting Act, prove that what they're reporting is correct, you can't just keep inundating them with BS dispute letters. And that's not like a tactic that we use. Other credit repair companies do that constantly, but we won't do that to our clients. And that's how they keep charging a client over and over again, 9 months in a row, is that they'll say, we're disputing it, disputing it, disputing it, disputing it. And so if you're doing that, then basically your additional disputes start to get ignored. Like you're just spinning your wheels and throwing, stuff at the wall, and none of it is going to stick. So there's a way about doing it, and it's the right way, and it's ask them for verification, make them prove that what they're reporting is correct. If they prove that what they're reporting is correct and you don't disagree with it, quit trying to work angles and pay it off. You got these credit repair companies and these credit repair pros out there saying that, if an item was ever sold to collections, that you no longer own it because you don't have the original contract, stuff like that, right? And I know where they're coming from with that. Like I know the laws that they're citing, but it's like, let's not waste time. Like, let's not play these games. I'm trying to get people into homes. Did you owe these people this money? I did. Cool. Let's give them some money then. Okay. And then let's go our separate ways, and let's you pay the money that you owe going forward, and let's them leave you alone. Right. That's all we want. Like, just let us move forward with our lives and create homeowners.
Nice. Now, so are home buyers like getting banned or flagged by the credit bureaus for using these AI credit repair tools?
I will tell you this, the bureaus will always put out the idea that if you're making their life hard, that they're going to flag you, fine you, come after you. You still have rights as a consumer. I mean, however you want to dispute, you can dispute, right? And I haven't heard anything definitive from the bureau saying that they're going to flag anybody, but I'll tell you right now that they already do that. Like if you send in disputes, like we'll have clients send forward us these letters. They're like, we believe that you didn't send these in, that a credit repair company did. And it's like, so like, yeah, we sent in all identifying information. We did do your job, verify it or don't verify it and take it off the credit report, right? So they're already doing that. That's nothing new. They don't want to have to dispute. I think that what they're going to be reeling about is the amount of BS disputes that flood in from the general consumers. They thought they hated credit repair companies. It's like, hey, we don't flood you. At least we won't process, inaccurate claims of things being wrong. So we're not just flooding them, but these consumers sure are going to with AI, and because that's what they're basically being instructed to do.
Yeah, and you keep bombarding these bureaus with the wrong information, and no, that makes complete sense.
Yeah, so it wouldn't surprise me though. I mean, they don't like that. They're going to flag people. They're going to they have a way of marking the people that are causing them problems. The bureaus are big bad wolves. So
Of course, of course. So how can home buyers tell if a credit repair company is legitimate or just another scam?
yeah, I mean, I would look online for reviews in this day and age. Like, look at the look at the 5 stars, look at the 1 stars, right? Like, and you're going to find out like what's really going on. It's important how companies respond to their 1 stars. Are they, hiding, or are they saying like, well, hey, call us and we'll fix it? Like, that's what we do. If we get a 1 star, we're like, I mean, surely it's not a 1 star. Like, so let's maybe talk on the phone and fix it. But you can go to social media. I like peer reviews just because that's people like you. Look for what lenders say because that's the ultimate. Hey, if this company has been able to get me to the closing table, because what the problem is out there is even in the lending world, you got these skeezy credit repair companies that are offering commissions to their lender partners, which is a huge red flag for the lender too. It's like if you're watching this, like quit it. You don't need a 25 or $75. You get paid well when you close loans, and that's what you should be looking for is to help people close loans. So just because a lender says this company is the best, like there's sometimes like I don't say anything on some social media posts anymore, but there's sometimes where I'll see somebody like recommend a company, and it's like I know what's going on. I know that you don't get loans back because of them, and I know that you send them a bunch of leads that they rake over the coals and you make money on. Like, so anyway, my point is you want to find people that are actually real people saying this has worked for me. Number one, but the other things you're looking for is upfront fees. That's against federal law, making crazy claims. And then the lack of person to person contact. If they're trying to just run you through a system or something like that, then you can just do that on your own. Just Google how to repair my credit on my own and don't pay anybody at all to do it, but yeah, those are the things I'd watch for is, peer reviews, no upfront fees, no crazy claims. If it sounds too good to be true, it is. If you owe it, you're probably going to have to pay it in some way.
Yeah, and it's funny. So like in all the mortgage groups, Facebook and things like that, like when I see somebody ask for a credit repair company, it's like an overwhelming response of how many people tag you and your company. But those are also other high professional or high level professional, loan officers and whatnot, because we've actually had clients or been a client ourselves that have gotten to the closing table thanks to your company. And I think a lot of the alignment with you and I comes from just like this financial education and or just the education piece period. I know you're out there educating lenders all over the country. Who knows what me and you to run into each other, God knows where, all over the country. But what role does financial education play in helping homebuyers stay out of credit trouble after they buy their home?
Yeah, well, it's just starting a new cycle over, right? So it'd be the same thing as saying like, when should we start educating our children about this? Like it's 17. So when should we start educating them? After we fix their credit, after they've closed the loan, like as soon as we can, right? Because they probably have a couple more years until they're going to try to refinance or do a move up purchase. And if we have a few years to reset somebody's behavior and to really get some good protocols in place for them, they're going to have astonishing credit by then. Even and that's the beautiful thing about credit, and that's why when everybody's talking about changing the algorithm and adding this and then adding that, and I'm like, what are you doing? Like I really like it the way it is because it's a level playing field. It is all about what do you do with your opportunities, and it's simple right now. It's 5 sections, and it's just basically, do you pay your bills on time, and if you get debt, do you manage it well? And that's really about it. The other ones just kind of, 3 of the 5 sections of the algorithm just kind of fall in line with the 2 big ones by just, doing things the right way. So yeah, education is the number one thing where when I see on a credit report, other than like I was saying with catastrophic events, which, we have updates on medical collections, they're kind of trying to solve that. But almost everything is, man, if I just could have spoken to you whenever, before you got this car, before you co-signed, before you went late thinking it wasn't a big deal, if I could have had just a 30-second conversation with you, you probably would have prioritized that payment, saving yourself thousands or tens of thousands of dollars and a lot of stress. So it's all about education. As soon as we can, we've got to get people kind of a boot camp education, like here's all of it, and then keep on them on a drip. I like to do a weekly basis credit video education where I'm just telling them a real world thing. And then that really, we get messages every day from people saying, hey, thanks so much. I passed this on to my kids, or my family is now educated about credit. Before we were blind, or before we hated credit, and now it's a great tool for us. We're purchasing our second home, like that sort of thing.
Those stories are the best. Now, this is one that I run into a lot. I know what I say, but how do you help home buyers who feel like ashamed or stuck about their credit situation?
I got a line that I've leaned on for the last 20 years, and that is, bad things happen to good people and good people make bad mistakes. Like that's it. Like the longer you want to sit in shame inside your house in the dark, the less productive you are for your kids, your family, your community, right? So I say the same thing about getting your credit fixed. I say the same thing about filing bankruptcy. I say the same thing about losing weight. Is that, look, if you know you need to do it, you just got to do it. The only one that's ashamed right now, or that there's shame associated with, is you. Like, everyone else is living their own life. Like, no one, hate to break it to you, nobody gives a shit. Like, right? Like, I am so much more worried about my finances than like yours, right? And so I just tell people, like, that is literally just a barrier that you're putting into your own head. But what I want you to do is think of the father, the mother, the friend, the community member that you would be if you weren't stressing about your credit right now. What would you be thinking about? And people don't get that like, while you're thinking about something bad, stressed or focused on something bad, you cannot be focused on something good, right? So it's like, get this thing out of your mind, get this thing out of a negative space and into a good space, and just watch what kind of ripple effects there from having better credit, better life. So
Well said. Well said. So beyond the credit repair, you talked about behavior. What are the financial habits, if you will, that new homeowners develop or should develop to protect their credit score and mortgage?
yeah, so I like automating credit. I say automate it to an 800, which means you are going to, number one, look at your credit every month. That's not the automate part, but you're going to look at your credit every month and see, do I have any late pays? Okay. That's really all, or not late pays, past due amounts, because you have to be 30 days late on an account before you get a late pay on your credit report. So you might end up paying a late fee if you're 15 days, 20 days, 28 days late, but you're not going to get a late pay. So number one is check your credit on a monthly basis and just skim at the very least for past due amounts and make sure that there are none. If you do that in conjunction with getting things set up on auto pay, then you are never going to have a late pay. You're always going to make your payments on time, or you're always going to pay your credit cards off or your cars off or whatever your payments are. And then you're going to automate your way up to an 800 credit score. Now, to do that, it's a double layered approach. You want to do an auto pay on an auto pay, meaning I have a credit card, I have a bank account, I have a Netflix account. I am going to set my Netflix up to be paid on my credit card, and I'm going to set my credit card to be paid from my bank account. And I don't have to do anything besides check my credit report on a monthly basis and make sure that that credit card that I have set up on auto pay is auto paying. That's all. And then I'm good to go. I just do that on everything, right? And then I never write a check ever. I haven't written a check in like, I don't know, like 10 years, but all my payments get made and I have a 829 credit score.
Nice. Now, is there a credit, like what credit monitoring do you recommend for homeowners after they close on their mortgage?
Yeah, there's a couple out there. I mean, one's not necessarily better than the other. You have to understand that the way it works with credit monitoring, if you're not paying for a FICO score, like paying out usually about $40 a month to have a FICO score, then you're getting either a version of FICO that's not going to be apples to apples with what like a lender pulls. So you need to understand that, or you're pulling what's called a Vantage score through like Credit Karma, or most other consumer credit reporting sites are going to be Vantage scores. The information should all be consistent. Like if I pulled a lender score, I paid for a FICO score, and then I pulled a free Vantage score. As long as it's bureau by bureau, all of my information should match up, but just my scores are going to be different. So what I'm trying to say is, wherever you have credit monitoring, I don't really care what you're using. You just have to not pay that much attention to the scores because they're probably not that accurate, or they're inflated probably by 20 or 30 points most likely, and just watch the line items. Now, My Credit Guy does have our own credit monitoring service that's going to be available here in the next couple of weeks. So I'll make sure to get that to you, because what we've made sure to do is that we don't sell information to any partners like all the other credit repair or credit monitoring companies out there. So when you go and you typically, when you are buying a credit report wherever, or when you guys pull a credit report, and I know there's trigger lead reform in the works right now, luckily.
I think it just passed today.
That's amazing. Lots of hard work
I got to
there.
double check.
That's awesome. That's awesome. So anyway, so we should have a solution, but as of right now, if you have something that you are checking on a monthly basis, that's great. We refer clients to a company called Identity IQ as of right now. But again, I'll have other options here in the near future that we can recommend too.
Yeah, let me know, because I'm using Identity IQ through recommended by obviously your team, but I would rather use.
Yeah, it's close and it's cool.
Okay, awesome. Now, in regards to if I'm speaking to home buyers, and they're getting a lot of information from what we're talking about here, what's the best first step for someone who wants to repair their credit to buy a home today? What's their first best step they could take today?
Start with a free review. Like everybody's always, there's like, oh, I don't know if I want to get in the process. Da, da, da. It's like, I am telling you, it is a free review. We will pull your credit report if you don't have one. If you have one, you just send it over to us. We look at it together for a few minutes, and I say, or my team says, okay, here's what we would do. Or we ask you some questions first, figure out what you disagree with and why, get some, some flavor for the items on there. We come up with a game plan, and then we go, that's either something that you can try to execute on your own, or here's what we would recommend: 4 months with us or 2 months with us or whatever it may be. And here's what the cost would be. And would you like to move forward? And you got to remember that all of these people, the lenders out there, they're like, you can do it on your own. It's like they work a full-time job. Like, what are you doing? Like, they work a full-time job so that they can close a loan with you so that you can make thousands and thousands of dollars. Like, I'm not trying to blow anybody's cover here. I'm just saying, like, why are you telling somebody that they should pick up basically a part-time job repairing their own credit for a little while? Like, you pay for it then. Otherwise, you want to pay a few $100s. Like, I mean, I pay, I have a couple acres here to mow. I pay, close to $200 to have it mowed. So to pay a couple $100s that you don't have to worry about the credit bureaus, the creditors, it's all done for you. I mean, it's pretty tough to beat.
Yeah, don't let Renee hear. It'll remind us quickly that pros pay for speed, right?
Yeah.
So
Yep.
uh, for those that are wanting to qualify for a mortgage, I'm sure there's a lot of answers here because I know there's like a lot of things that come to my mind. But from your perspective, what's the worst thing that a home buyer can do to their credit while they're trying to qualify for a mortgage?
Late pay. I mean, a late pay, especially on your existing mortgage, and that happens because there's times where they're trying to time out, or the lender might say, "Hey, I think I'm going to be able to get you to skip the June payment," and then maybe something changes a little bit, and the lender forgets to go, "Oh, hey, by the way, like, do make your payment." So that does happen, but a late pay doesn't get much worse than that. Paying off and closing a credit card's pretty rough too, especially if it's one of your only ones. And so these guys will go out and they'll listen to, and I know that Dave Ramsey does give a lot of good, like, old school advice. Maybe it's good now too, but the credit card advice is horrible. Like, it's really bad. And when people do that, it's like they think that telling me that Dave Ramsey told them to do it, that I can call the credit card company and get their card back on there. It doesn't work like that, right? And so that's one that I'm like, just please, like, don't, like, leave your credit cards alone. Do not close them. Like, you're gonna kill yourself. Like, not literally. Sorry, you're gonna kill your credit scores.
Correct. No, and yeah, I mean, sure Dave Ramsey's got some stuff for getting out of debt, but then there's, people that take a lot of what he says maybe so literally, and then obviously I'm not even gonna get into my side of it of all the, advice in regards to and I have nothing against Dave Ramsey, but we're trying to help clients build wealth and things like that, and they're having challenges with affordability on a 30-year mortgage, and we've got people from his team telling them that they need to do a 15-year or things, so yeah, a lot of bad information out there. Now there's the other thing that I get annoyed with these, like, credit card stacking companies, zero APR, like they just push all this stuff, right? So what is the actual true best credit card strategy for home buyers that are building credit for a mortgage pre-approval? And I think you talked about it a little bit earlier.
Yeah, I mean, the question always comes, like, what's the perfect number of credit cards? Like, what do I do with them, right? So if somebody has two credit cards, that is enough. If they already have five, six, seven credit cards, that's fine too. And when people say, is there a number that's too many? It's like, whenever it gets too many to handle, right? Because there's so many different ways where you stop getting credit for it, or that a credit card can hurt you, that if you have more than you can really pay attention to, it's like, well, you have five credit cards, but two of them have been inactive and in your wallet for the last 6 months, which means you're not getting credit for them anyway. So, like, you actually have three credit cards. But what I like to do when you are preparing for a mortgage is I want you to stay in a sweet spot of 5 to 10%. And that 5 to 10% is going to show responsible usage. So that means that
Utilization, you're saying?
utilization. Yep. So because the next people in line are looking at your credit score, right? And what they're really looking at is your behavior. And what they want to see is that you can go out, use credit responsibly, and pay it off. That's what the credit card section is really looking at, because it's different, it's revolving, right? Like, you can use it, pay it off, use it, pay it off, use it, pay it off. And they just want to see, like, can this person go out into the wild, use a credit card, not use all of it, even though they have it there, and then pay it off on a monthly basis. And if you keep it at 5 to 10%, you're going to do not only show usage, but the other thing where they kind of get you is that if you pay your bill off every single month, unless you get a little scientific about the dates you're paying it on, sometimes you don't get full credit for that payment. Either you don't get payment that you ever, or you don't get credit that you made the payment, so you might get stuck kind of reporting a high balance 2 months in a row, or you don't get credit for the usage because you paid it off too quickly. And so you're kind of damned if you do, damned if you don't. So if you keep 5 to 10% on, you're good there. Or you can just call your credit card company up and say, hey, what day do you actually send my information to the credit bureaus? And then whatever day they tell you, make sure that your payment has posted 3 days before that, to give a full 72 hours for your balance to update it. That balance that's being sent probably around the 15th of the month is reflecting what you've paid it down to, rather than if you pay it down on the 26th of the month, but your information has already been sent in on the 15th, you're going to be stuck with that old balance until that next month.
Yeah, and that's like a double-edged sword because I have clients that are like, I don't get it. I pay my credit cards off every single month, and I'm like, yeah, well, part of the credit, that what makes up the credit score is they want you to actually use your credit. So you use too much, it's a problem. You don't use it at all, or you're using it and just paying it off right away. They're saying, okay, well then this person's not utilizing credit, and then they don't get the benefit of that. Is that right?
Yeah, I mean, what I call, if I look at it more through a skeptical eye at like the credit card companies, I go, you just want to make some money, right? Like this is the tax to keep my credit score going up, because they should be able to look at it and go, you're not using it ever. That's a good thing, right? Like that's just as good as I think as using it and then paying it down. But they want to see that responsible usage. And at the end of the day, they're a business. And so it's an incentive to put some money on that credit card and make them a little, interest.
Nice. Now, this is something that I've been seeing. This is like within the last 30 days, I've been seeing just an overwhelming amount of clients talk to us about it. I've been seeing articles all over the media. So if we're talking about student loans and mortgage approvals, so obviously there was a lot of deferment with student loans, but I'm having a lot of clients that had student loans deferred with whatever, and if you can elaborate, somehow something happened, and then all these people now randomly had these lates on their student loans. Is that something you're seeing?
Yeah, oh, tons. And so here's what happened. You got two sides of it. You got thousands and thousands and thousands of borrowers that are saying, I had no idea that the payment was coming, and all of a sudden it's 90 days late. Not even 30 or 60 days late, just straight to 90. Like what the heck? As we're sorting through these, and we are getting resolution on a lot of these where we're able to get the account updated or removed entirely, okay? But the position of the student loan companies and the lenders is no, no, no. What happened was we put you into forbearance. We told you how long it was going to be, and we told you we didn't have to remind you. So what happened here is a lot of this, you had email addresses changed, you had phone numbers change, or you had the student loan company say you knew when it was. Sending you out a reminder is just a courtesy. We actually don't have to do that legally. We don't have to send you a letter saying it's going to restart. Now, the student loan companies say, we did let everybody know. We definitely let you know. Whether you didn't open it, didn't read it, whatever, that's up to you. But we technically didn't even need to do that either. So whatever. And their position is, because everybody's like, well, why the 90s? They go, because we didn't ring you up when you were 30 days late. We didn't ring you up when you were 60 days late. We waited until you were all 90 days late to actually come calling on this. We did that as a courtesy. So do you want us to have the 30 and the 60? That's their position, is we did you a courtesy. We don't owe you telling you and telling you and telling you again. And we did you another courtesy by not calling you late on the 30 and the 60, but the 90. But the problem was that the 90-day late hitting people's credit report was like the notice that everybody actually paid attention to. So if they would have hit them with a 30-day late, everybody would have reacted and responded at 30 days late. And instead they let it go to 60 and then 90 days late before anybody knew. So what the student loan company looks as being kind of theirs anyway, and they already did what they were supposed to do, and this was a courtesy, everybody else is looking at it going, no. That's what's going on. You got two different sides, and you got the evidence, usually in most cases where we're digging in, on the side of the student loan company, and us having to typically sort through in like a goodwill fashion, where instead of being like, this isn't ours and you better take it off and all that we're going like, hey, sorry, can we please? Yeah. And then we're typically having right at that second, not at that second, I'm being dramatic, but in order to get this all going, a lot of times they're having to get into a new income-based repayment plan in order to get this whole rehab and to get the courtesy deletion of the 90.
Got it. Okay. Now, another very recent thing, I don't know if it was this week or last week, I think there was the biggest password leak ever. I think 16 billion passwords. So if someone has identity theft on their credit report, especially due to that, is that something that they can reach out to you about?
Yeah, what I'm going to instruct them to do is to lock their credit report. They need to freeze it with all three bureau. And usually, if you get a hold of one bureau, then the mechanism is that it'll automatically lock the other two. But if that doesn't happen, I would go to all three one by one and lock those. They're going to give you a PIN number. And then anytime that you go to apply, like everything will keep going as normal. But then if somebody were to apply, they're going to contact you and be like, hey, here, do you need your PIN number? Are you trying to pull credit? And you can be like, I am not. And then that will stop that person in their tracks. And then it's a pain for just a minute, because when you go to pull credit, like if I was going to get a home loan with you, I would just have to call up Equifax and be like, hey, I just need to unfreeze. They're going to say, what's the PIN? It's just an automated system. I unfreeze. I say, hey, Mike, go ahead and do it. And then I call back in and refreeze it. So if you think that your identity has been stolen, freeze your credit report right away, but also look at your credit report. That's what you want to do. Look at it. Is there anything that you disagree with? Get down at the bottom of the credit report where the inquiry section is and see if your credit report has been pulled in the last couple of days. That will show you that someone's out there trying to use it, and then, ultimately freeze it.
Nice. Now, just looking forward here, as we start to wrap, how is credit scoring changing for home buyers in 2025 and beyond?
Yeah, we'll see. So I say that because they say things and then they postpone them, and then they say things and then they postpone them. So as of right now, it is supposed to be inevitable that FICO 10T and Vantage 4.0 are going to enter the mortgage world. And to keep things short, basically what that means is that additional data fields are going to be pulled and factored into the credit scoring algorithm, like rental payment, utilities, things like that. There's also adjustments to the way that credit scores are going to be calculated. Do you carry balances from month to month? It's going to do what's called trended data, where right now, when you go to pull credit and somebody has a maxed out credit card, you pay that thing down, you rescore it, new score, great. Now they're going to be looking at the average over the last 24 months. So if I've carried a maxed out card, I go and apply with you, there shouldn't be any more pay down and get an immediate big bump. So there's just different things about it that I don't love, because I think it gives the clients more exposure, where right now it's a simple, easy to manage scoring algorithm. I will say that they've already bumped it back twice, I believe, the rollout of it. And right now they bumped it back and have zero up. At least before, they were like, it was supposed to be coming up that they were going to roll this out and make it. And at their last update, they're like, it's postponed and we don't know. We'll get back to you. Like, so that's kind of where we sit right now.
Love it, man. Well, obviously, I'm constantly learning for you. And I think what I've learned from you that really changed everything for my home buying clients is credit repair doesn't define you, but bad credit can disqualify you or cost you potentially hundreds of thousands over, a 30-year period, right? If we're looking at a 30-year mortgage, and can disqualify you from buying the home that you deserve or getting the best rate. And I think it's important what you said is the sooner you face it with the right credit repair company, especially one that understands the mortgage industry like you do, the faster you can achieve home ownership. So, whether you're buying your first home, upgrading to a bigger house, looking to refinance, or just want the peace of mind that your credit score won't hold you back for a mortgage approval, my credit guy and your team is obviously who I trust my clients with, myself with, for their home ownership dreams. So for those of you, if you're ready to stop letting bad credit keep you from buying a home, you can go to mycreditguy.com, get a free quote. Obviously, you can reach out to me. I can always put you in with Sam and his team. But Sam, before we wrap up, where can home buyers learn more about becoming mortgage ready? And then what's the best way for mortgage professionals to connect with your team?
Yeah. So for everybody, if you go to mycreditguy.com, a mortgage lender is going to find, get a free demo or get a demo or connect with the team. Client's going to see to get a free review right there. You can always email me, Parker team at mycreditguy.com, client or loan officer. And find us on YouTube. We put all of our educational videos up there. If you find the My Credit Guide channel, we're going to have a blue and green check mark there. And we put up all the different credit scenarios, how to recover from credit after a divorce, a bankruptcy, how co-signers work, why pulling your credit isn't the negative thing that some people, think it is. Just all of that stuff on there, kind of decoding it. And you can always, I'm old enough that Facebook is my social media jam. So if you're on Facebook, you can always find me personally on there, Sam Parker, but make sure to like and follow and interact with My Credit Guide.
I love it. I love it. Sam, thank you so much, my brother, for jumping on. Always just a ton of knowledge. Thank you for everything that you've done for me, my team, my clients, and we're beyond grateful for you and your team, brother.
Absolutely, man. I appreciate the partnership and we'll keep them rolling.
My man. Appreciate you, brother.